David, how's your cognitive dissonance going from basically marinating your brain for a couple of days in Warren Buffett's value investing and then taking that marinated brain and searing it on the grill that is cryptocurrency? Yes. How's your brain?
Well, one of my wife's favorite quotes that she's much smarter than I am. She's a PhD. She's wonderful. And does not work in tech and thinks all of this is ridiculous.
Not a high benchmark, but continue.
Yeah, not a high benchmark. One of her favorite quotes is, the true hallmark of intelligence is the ability to hold two conflicting ideas in your head at the same time. So
okay.
I just, I've been having that drilled into me for about 15 years now.
Well, which part of Warren Buffett's argument do you think is strongest, Charlie Munger's argument is strongest, and that you take away from that side of the argument? And then we'll go to which side do we think they're most wrong on?
Their arguments against crypto or parts of their philosophy in general that I like?
Yes.
Both of those things. Both those.
Their general worldview, let's take their worldview, which includes crypto and value investing. Let's take their entire worldview and where you think they're right and where you think they might have a blind spot, if any.
Oh, great. Well, we just wrapped up recording our finale part 3 last night. So I'm so Warren's whole thing that you hear him say over and over and over again all the time, never bet against America. America is the future. Great. And for his life, that was the case. He was born in 1930, right after the stock market crash. And, just like his life has been America up and to the right. And he has been a master at taking the long view on that. Whatever's going to happen in any given year, any given cycle, just like we saw in crypto here, it's all noise in the long run. And you believe that? I believe
for our lifetime
that view. I'm not sure it's necessarily America is the domain that it applies to anymore. It may not. I don't have a view one way or the other.
In that the market is bigger than America, but American exceptionalism will continue. Do you believe it will continue through our lifetime?
Now. I think it applies to the internet, obviously.
This is the Rosenthal doctrine, not never bet against America, but never bet against the internet.
Exactly.
I like that. I would agree with both of those statements. Ben, when you look at Warren Buffett and Charlie Munger's worldview, life philosophy, as you have marinated in it for 3 episodes, what is your key takeaway that you think is absolutely spot on, inspiringly correct, and you cannot get out of your head? It's like built into your sort of operating system now, has infected your brain.
Well, let me bring it into a poker analogy. So they do investing as an expected value calculation, where there's the probability something will happen and then the payoff if it does happen. Their style of investing indexes about as aggressively as you can towards certainty. And so the payoff is muted, but we're pretty certain that will continue to happen for many years in the future. Somewhere in the middle, you have tech investing. And if you have early stage tech investing, it skews a little bit more towards speculating, really, than investing. You got great people, you got a great trend, but there's no business to analyze really yet. And then if you keep going all the way on the other side of the spectrum, you've got crypto. And so you have to be comfortable making the complete opposite investment philosophy. And it may be a speculation philosophy where you're saying the probability of that something happens might be really low, but the payoff will be really, really high. So it is just like, it's that one simple EV equation and then just weighting the different factors in dramatic ways.
Yet your chosen profession is not to run a mutual fund and put money into Disney and IBM and Starbucks.
Well, Jason, you got to have fun in life.
So, since you don't
Look at that shirt you're wearing, Ben.
Yeah, Ben's getting a little wild over here. So, Ben, since you don't care about coffee, Disney, and cigarettes, and you don't pour your money into those things, you're basically saying their safe philosophy is not for Ben Gilbert. You
certainly not at this point in my life.
Yeah. See, I think that's actually a reasonable decision. At your age, 23, this is a better decision for you right now. You're
22.
30. What are you? 30? You're 30, right?
31.
You're 31, right?
31.
So you want to hit your 1,000x. You want that possibility. You're not going to get that possibility buying Disney or Starbucks or Apple stock. It's not possible.
And frankly, to bring us back to cryptocurrencies, I am sympathetic to the argument that you can sort of look at Bitcoin as it could grow into steal gold's market cap. and that the idea that there's still a 10, 15x left in Bitcoin, it's not investment advice. I don't know if this is going to happen, but I'm sympathetic to that belief and it makes sense to me.
It's not crazy.
It's not crazy. There are other things. You look at Uniswap or some of these other Solana where it could still be 1,000x. But
explain those
to
two
go back
to
to
the
that
audience. Uniswap and Solana.
Can I kick this to David? He's deeper than I am.
I'm deeper.
Okay, David.
Well,
since we're bringing up 1,000x's, let's.
Yeah.
I can't let that one just fall on the cutting room floor. Let's
and of course,
like
you got to do the expected value thing. Like you have to assign your own very low probability versus Bitcoin's much more sort of muted, reasonable probability.
Right. The idea that all of the people who have taken on Bitcoin as a religion and as a store of value would all, in some short period of time, say, you know what, I no longer believe what I believed for the last 10 years, 5 years, 3 years with a 10% bet of my net worth. The fact that they would all unravel that would be hard to believe.
Yeah. Well,
they would go down kicking and screaming.
I think is so often in investing. The right answer is you don't know what the future holds. It's uncertain. And so you should do both.
Right.
But yeah, no, Uniswap and Solana are two different examples of, I think, where a lot of the innovation is happening right now. So Uniswap is a automated market maker liquidity pool that allows you. So like when you trade, I just experienced this a couple weeks ago. I sold some stock in my brokerage at Vanguard because I was transferring over to my 401k, doing the SEP IRA plan. So I was just liquidating some stock from my brokerage account, wanted to get it into my IRA account. It took 5 days from the time I put the sell order into my brokerage account to then I could buy in my SEP IRA account. Even though all at Vanguard, same securities, all I want to do is transfer ownership. That's ridiculous. And that happens because you got to have counterparties on the other side of your trade, and then it takes 3 days for the trades to settle. You know all this from, Robinhood and whatnot. Uniswap is an automated liquidity pool, market maker. All just happens instantaneously, all decentralized. There are no counterparties. I mean, it's all within the pool, all done through smart contracts on Ethereum. Awesome.
So let's explain that in plain English. You own a Bitcoin. It's worth $38,000. You say, you know what? I don't want to be in Bitcoin anymore. I want to have more risk and fun owning Doge and Ethereum. Yep. So I want to swap my Bitcoin for 50% Doge and 50% Ethereum. My normal course of events would be to sell my Bitcoin on my Coinbase account or whatever you use, Robinhood, etc., pay a bunch of fees, which would be not de minimis, wait, and then go buy Doge and Ethereum at whatever the market rate is and pay another fee, correct?
Yeah. Meanwhile, there are market
different?
Makers in what you described. There are market makers on the other sides of those transactions that are profiting off of your order flow, order flow, whatever. Like it's a service that they're providing to the market. With Uniswap and other decentralized market makers, they're just liquidity pools. And then anybody, you, me, no matter how much of any one token we could have a lot, we could have a little, whatever, we can put our tokens into the liquidity pool and then we can get paid for it. Just like whoever's providing liquidity in the markets are getting paid. And it'll all happen instantaneously and it's all decentralized.
So I put my one Bitcoin into Uniswap. They now take ownership of that. They have custodian of my one Bitcoin. And then other people get to do what with it?
That's a good question. I don't know. I'm not deep enough to know whether custodial ownership actually transfers or not. I would assume to some rights do. But yeah, like if you're like, I'm going to hold this Bitcoin, I'm not going to do anything with it. I'll just stick it into this liquidity pool, and then you're going to get a yield on that.
Huh. I suddenly feel like Michael Che and like Colin Jost asking Elon what Doge is, and it's a grift. Because I'm kind of like, so who owns the pool?
Did you write that joke? By the way, that is so freaky.
No. Leave me. Okay, no. Let's not talk. I don't want to talk about the SNL thing at all.
Let's not talk about it. But you got to be loving life. The pandemic is essentially over.
Yes.
At least you are traveling. You're seeing.
I am living my best life.
You are out
by
of your cage.
design. I am out. The tiger has left the building. Like I literally was like this tiger, and like I pushed the gate with my nose by accident, and it kind of creaked open, and then I put my paw out, and I was like touching the ground, and like, wait a second. I'm out. Is somebody going to hit me with the electric prod? And then I'm like, I run back in, and then I came back out a little bit more, and then I was like, oh shit, I'm running, and I just bolted the heck out of the cage, and I am going. I'm literally in New York. Went to the Knicks game Sunday. Went to the Nets game last night. Going to the Knicks game fifth row tonight. Going to Raoul's Monday night. Having the steak au poivre.
Man.
Full contact on Twitter. Just walking over the Brooklyn Bridge and Manhattan Bridge multiple times, drinking iced coffee, just living my best life, going back to Austin, hitting Miami. I am done with the pandemic. 100%. Like, I am done. How are you guys doing with your post-pandemic lives? I'm curious now that we're catching up.
I'm feeling similarly. I mean,
you're vaxxed, obviously.
Yeah. I'm a month in or something. And, there's still risk, but I think this has really opened my eyes to relative risk in a way that I don't think I used to think enough about. Like, not doing stuff has a downside too, and that downside might be way, way higher than the idea
Example.
Okay, so I don't know if these percentages are right, but let's say the percentage of me going out in the world, including indoor dining, and let's even take an extreme example, like an indoor cycling class, the probability of me getting, life-altering or serious COVID at this point has to be similar to me, like driving my car to work every day for some period of time,
certainly
a month
less.
or something.
Certainly less.
Certainly less, right? So if I'm willing to take those risks in my life to date, shouldn't I be willing to take this risk of living my life? And what is the risk of not living my life at this point? That has an immensely high
depression, suffering, anxiety, doom scrolling at 4 a.m., and being a caged tiger. Tigers are meant to be in the jungle.
Absolutely. And
thus your shirt today.
You are a tiger in the jungle.
Yes.
Look at Ben's shirt. He's gone buck wild. I mean, are you going to dye your hair, Ben? What's going on?
I mean, it's already close to Rosenthal length, so...
You've gone full Rosenthal, but are you going to dye it? Let me ask you this. Have you considered I considered dyeing my hair blue coming out of the pandemic. I've always wanted to have blue hair, and I was like, I'm kind of thinking about it.
My friend.
I'm kind of thinking about it. I think it would be ridiculous.
That would be
I think, if you were going to dye your hair, what color would you go, Ben?
So I was one of those kids in middle school that did blonde tips, like the frosted tips.
Kid.
I had the wave in the front. Just the wave was blonde for a little bit.
Wow. I was frosted flakes. I never thought to do it to my hair, though. Keep going.
So anything that I do, I would have to make sure resembled nothing like that.
Ever? Can we get a photo of that? Can we get a photo of you with highlights?
I'll see what I can do.
All right. So now back to the Warren Buffett philosophy. I really like what you guys have taken from them. Now, the criticism from the crypto side is these people are old and whatever lessons they learned are wrong. Is there anything, David? I mean, it's correct that they're very old, but do you think
even Warren would agree with you there?
I mean, collectively, are they 180? I mean, one's 90.
Charlie Munger's 97. Warren is 91.
Okay, so if you add those two numbers up, you're minusing 13. They're 187 combined.
Yeah.
I mean, dang. We should all be so lucky. So I wonder, David, do you think their historical perspective, to the crypto people saying, don't listen to oldsters, knowing what you know now, do you think that criticism of their wisdom is not applicable going forward? Are you more convinced of that, or are you more convinced that it's applicable?
More convinced it's not applicable. I have two takes on this.
Wow.
One, I could be wrong, but I've listened to them talk about a lot. I don't think they've actually dug into anything in crypto. Their arguments against Bitcoin, you could take it or leave it. I don't personally agree with it. I think Bitcoin is valuable, et cetera. But they haven't dug into anything beyond that. They just don't engage. I think it's hard to take their criticism seriously when you're like, dude, you guys haven't done the work.
Now what about their philosophical advice.
Philosophical thing. So,
and their outlook on value investing.
Our buddy Andrew Marks at TQ Ventures, who's awesome. We talked about this in the episode. He's known Warren and Charlie like most of his whole life. His dad's Howard Marks, and studied them. He's great. And his take on this is like, look, Warren is and was the world's greatest, he calls it status quo investor. As long as the future is mostly going to look like the present, nobody is better than Warren at handicapping probabilities, valuations, making investments, et cetera, and track record.
Which it did until like 1995. Honestly, like you look from 1950 to 1995, a lot of stuff changed, but nowhere near the rate that the world reorganizes itself on a 5-year and 1-year basis now.
Yeah. And there's this great moment in 97 at the Sun Valley, the Allen and Company conference.
Yeah, sure.
So there's a panel on stage with the Roberto Goizeta, the CEO of Coke, Warren Buffett, and Bill Gates.
Yeah.
And on this panel, Gates is like, he like mortally offends Roberto. Roberto never talks to him again for the rest of his life. Where he's like, he basically says, look, Coca-Cola could be run by a ham sandwich, like, which is a Warren line that he borrows. It's a freaking true.
Wow.
And he's like, versus Microsoft, like, it's dynamic. Things are changing. Like, I'm going to have to retire because by the time I'm 60, I'm your age, I'm not going to be able to run Microsoft because things change too fast. And,
wow.
And that's the world we live in today. Like,
actually, though, in fairness, Coca-Cola and the drinking of soda, it might have taken 3 decades, has gotten absolutely pummeled. And they're in the water. I mean, they're still in the liquid business, I guess. Arguably, liquid in bottles is still their business, but it's definitely not soda.
I'm not
anymore.
excited to buy Coke stock.
Yeah, Coke stock was a really high performer. Yeah, I guess you have to roll with the punches. Okay, Ben, just wrapping up here. Anything in their philosophy that sticks with you in a deep way? I'm listening to A Walk Down Wall Street right now.
Random Walk Down Wall Street?
A Random Walk Down Wall Street right now. And I am so enamored with these fraud moments. It's just like Zeke cleaners and all of these different like chicken stands going public. It's literally like the worst of SPACs combined with the worst of crypto combined with Theranos. And you're like, this happened in the 60s. They added Tronics to a name of a company, and it went from 4 times, an EBITDA multiple to 16. I'm like, where have I heard that before? Oh yeah, adding .com. Oh no, adding crypto. It's like, it's the same movie over and over again. Some trend happens, the charlatans come in, it's a real trend, and they just take suckers' money from it. Ben, anything you want to close with there?
Yeah, I think the biggest thing that's left an impact on me, and of course the world has changed, and I believe that you need a different style of investing today to deal with the fact that the world could completely change 5-10 years from now underneath your feet. But their notion of intense preparation to be ready when the moment comes to move quickly, I don't think I fully understood and appreciated that before. The way that they were able to take some of these really big positions in companies that just, knocked their socks off was because they spent years understanding the sector, understanding that business, and they said, if it ever got to this price, like let's say someone tried to buy them and then backed out and then the stock pummeled, they were always there and could make a decision in an hour because of how prepared they were.
Wow.
And I think it's that level of sort of preparation and sort of itemizing opportunities, if at the right price they ever came along, to be able to move quickly. That's a powerful concept.
And of course, the epic moment was 2008 when they bought $5 billion worth of preferred shares in Goldman Sachs during the preferred thing.
They did way better on their B of A deal than on Goldman.
Yeah. Well, the Goldman, I think, they redeemed them, earning 3.7.
They got about $8 billion back on the $5 billion invested, so they made $3 billion in profit.
I mean, it's incredible. $3.7 billion. I mean, here's the thing. When we talk about multiples because we're investing at such small, implied. We're betting against long odds, small bets, and we need 100x. But when you're putting a big number to work and you get a big number back, even if it's not 2x, it's still a lot of capital in a short period of time.
That was fixed income. That was not common equity. It was a preferred. It was essentially debt. So it was low risk, high return. That was a great move.
All right. Before we move on to James Bond, I'll leave you with this incredible quote, which I love from Warren Buffett. I try to invest in businesses that are so wonderful that an idiot can run them, because sooner or later, one will.
This is the ham sandwich idea.
It's the ham sandwich idea.
The ham sandwich.
Well, I mean, I have been thinking about this myself, and if I could take, like, I would love for there to be a vehicle, and somebody please email me if this exists in the world. As I liquidate and get tech stocks, is there a way? I know there are these like ways to transfer shares, almost like this Uniswap, like into pools and exchange trades. I just want somebody to create a way for me to just take a percentage of my net worth and just hit a dial and put it into Disney and Amazon or whatever. Like, just these are three things that I believe will exist and be bigger when my kids grow up. I just want to move a percentage of my net worth every year into a Disney stock. Just
You should just do that.
I guess. The problem is, like, I'm struggling with this concept of paying all this capital gains and then buying another share versus keeping tech stocks that are high growth. Like if you own Square, like, and Uber and Robinhood and Calm or whatever. Shopify. Like, okay, this is a great run. It's going to keep going, but I would really like to own some Disney too.
Yeah.
How do I want to be Sequoia that sold Apple and made $3 million on their investment total, or $6 million? You stay in that one.
Well, this is not investment advice, but couldn't you borrow against your stock and then do it that way?
I don't think I think borrowing against stock and then buying other stock is the big no-no. I think they give you like a huge warning. Like, and I'm sure people do it, but I think there's like a big warning, like, if you're taking margin against stock, please don't buy stock.